Hi, I am Anna. I come from www.ntvforex.com. Wall Street next week financial astrology for the successful investor amptrade. http ntvforex.com news ID 417F46 7/19/2023 10:28 p.m. One charts suggest the S&P 500 climb will stall out at the end of July. August is coming. Stocks could continue to rally next week, but summer markets are usually thin and wild and anything can happen, but market risk is highly elevated. The first half of the reporting season is generally positive, but it is very unlikely the latter half into August will be. Going forward, economic activity caused by the pandemic should bottom out in the third quarter GDP due to reopening efforts. This recovery, however, will be uneven. While a faster recovery than in the past, it will not a supercharged V. We see a U or skinny U US economic recovery, but stock markets not V, L, or U but W. Q4 US GDP will highly depend on US election outcome. For Q3 we project a 10% market correction from Q2 2020 close. Recommendation 100% protection until September 2020 market close. Target V1.1 SPX 3069 Nasdaq 9175. Some known unknowns. US politics July August November. Oil low. Oil prices are a positive for consumers and most businesses. COVID vaccine treatment testing reopening progress. Debt defaults ongoing. US GDP negative Q2 2020 with high unemployment. Rising record bankruptcies H2 2020. Stock buybacks. Dividends reduced or dropped. Trillions of dollars of cash on the sidelines. China risk elevated. Central bank support measures. Numerous geopolitical hotspots. Black white swan events. The good news this opportunity. Our views. We have a short bias given growing elevated market risk now until late summer. Post-summer investments should be targeted for a post-COVID-19 world. For a recovery rather than quarantine portfolio. Traders should day trade or have very deep pockets. Current high volatility making directional bets dangerous. After hard rallies or market drops, it is smart to book profits. Investors require a longer-term horizon than normal. We are no longer accumulating but selling stay-at-home stocks that have been winners from this crisis. We will be planning a different strategy for the post-November US presidential election. Conservative investors may prefer water utilities, tips, or high-quality corporate bonds and dividend-paying stocks. At the right price, and right time frame, the COVID crisis represents danger opportunity. Commodity trading. Gold fall. Astronov first by 14.88, second by 14.80, sold 16.50 1580 re by LT 1650 OB OCO late summer. Silver Astro is becoming positive first by 11.80, stop 19.20. Copper this now has Momo and no longer just a deep pocket hold. 280 support R1 3.00, R2 3.10, R3 3.25. Trading. Our approach is to enter early and exit early, lots of profit nonetheless. We have a short basis into August. Risk 3,250 3,300 SPX reward 2,900 2,850. 2020 market close trading target V1.1 SPX 3069 Nasdaq 9175. DJIA sold 26,000, 27,000. SPX sold 3,150, 3,150, 3,145. Nasdaq sold 9,940, 10,400, 10,512. The following prices are comfortable investing accumulation zones for us if when next seen late summer. DJIA 22,500, 23,830. Nasdaq 7,700, 8,300. SP 2,600, 2,750. Key dates July 20th, 28, August 30th 3. DJIA 26,500 pivot 27,000 resistance. SPX S1 3155 S2 3080 S3 3025 S4 2980 S5 2800 R1 3231 R2 3300. Nasdaq 10,500 pivot S1 9800 S2 9500 S3 9140 11,000 resistance. Gold 1800 support pivot R1 1825 R2 1900 R3 2000. Silver 18 support 20 resistance. Oil 38 pivot 42 resistance 35 support. Copper 2.80 pivot R1 2.88 R2 3 R3 3.10. US 10-year watch. CNY watch 7.03. 2019 close DJIA 28,508 SPX 3,231 amp Nasdaq 8,823. 2018 close DJIA 23,327 SPX 2,506 amp Nasdaq 6,635. 2017 close DJIA 24,719 SPX 2,673 amp Nasdaq 6,903. 2016 close DJIA 19,762 SPX 2,238 amp Nasdaq 5,383. A fund fair value gold $1,600. Reduce risk and focus on capital preservation. Think traditional Swiss and preserve capital hedge and protect against downside risk. 2. China's world-beating stock bull run unleashed by economic recovery and liquidity sparks fears of another 2015 meltdown. While there are also astrological reasons Venus for this, we think it is now too risky a play with August coming and the China political risk orange. Our current focus continues to be reducing global portfolio risk. Before fall, we advise only fresh buying special situations amp or accumulating very undervalued quality stocks for the long term. Favorite H2 2020 sectors: entertainment, mining, safety amp, security amp, technology undervalued amp, highly scalable. Intermediate term we are downgrading select healthcare, lower cost, better outcome due to potential future political risk. Stock selection is important. When possible, we prefer to recommend stocks sporting strong cash flows, sound balance sheets amp, growing dividends. Choose your favorite stocks and patiently bid for them at near ideal prices if seen again August. Avoid margin and always remember that it isn't over the fat lady sings August. 3. Gold has been hugging 1,800 with 1,790 buying support. Silver seems ready to test $20 resistance. There are so many good buys in the precious metal space depending on your time frame and risk-reward desires. Here the trend is most definitely your friend. Review past WSNW and A fund luncheons amp conferences for many good ideas that can be quite profitable this coming fall-winter. Copper previously was undervalued largely as a pawn of the US-China trade spat amp Wuhan virus. Now, along with other commodities, a weaker US dollar has helped it get its mojo back. Intermediate and longer term it may attract the Momo crowd. Gold fundamentally there is short-term decrease in mine supply coupled with increasing investor interest. Please note gold is under highly favorable astrological influences late Q3 amp Q4. Long-time gold bugs are happy that more generalist investors are beginning to join the party. In addition, many major brokerage houses have $2,000 price targets into 2021. These views now seem achievable, especially if when inflation fears resurface and or a falling US dollar. We believe gold valuations will largely sport at or above fair value in this year of the white metal rat 2020. Just as it was undervalued for a long time, it can and is likely to be overvalued for a long time. While fundamentally gold is currently overvalued, in much of the fall amp winter, the astro is positive for gold, hence we maintain a full portfolio allocation. We advise precious metal investors to pay attention to stock selection but only selectively add until August. Gold remains cheap geopolitical crisis insurance. For investors who cannot or will not buy the dollar-US currency, as well as investors who wish to safely and cheaply hedge their US dollar exposure, only gold is as good as gold. Once again, some investors are hedging record equity prices by buying gold. They will not be unhappy. Gold FV $1,600 commodity FV 1,536 currency FV 1,633 inflation metal FV 1,455 crisis FV 1,776. Investors, we plan to stay long in 2020, recommending a precious metal sector buy hold rating and occasional hedging, selling, or profit taking before the fall. For we may settle at a level somewhat below where we were a year ago. It's hard to get back to where we were without a vaccination. Jimmy Chong, Chief Investment Strategist at Rockefeller Asset Management. HW, it's hard to disagree with you. The question is, what 2021 and 2022 look like, and what can folks glean from the commentary, especially when companies have withdrawn their guidance and made it difficult to get a sense of what their prospects look like. Tom Hainlin, National Investment Strategist, U.S. Bank Wealth Management. HW, a lot depends on who wins the U.S. presidential election. In one case, we will have a skinny U, in the other an L-shaped U.S. economy 2021-2022. Over the past week, the economic data continued to surpass expectations at a historic rate. There was further indication of a broad recovery in the global economy, and excess liquidity that has supported financial assets surged to an even more historic level. Tony Dwyer, Chief Market Strategist, Canaccord. HW, it might be wise to remove your dark sunglasses before late August. 5. It's time for investors to stop buying stocks that are stunningly decoupled from reality, economist warns. Subscribe our channel to receive the news as soon as possible. Thank you for watching.